curious, like you're obviously living it. Like, what would you point to as the things that have made Founders Fund as high performance as it has been?
If you divided this into access, evaluation of companies, and like follow on, there's probably an answer in each of those categories. On the access front, it's like, I've been here 12 years. The fund has been around for 20 years. Most of the access edge that we have happened before my time. You know, it's like the PayPal mafia coming together, Peter's brand. There's like a long history of people leaving storied VC funds to start their own firms and stuff like that. Like, I have literally zero interest in doing that. I am just riding the wave of Peter Thiel's genius. And that's awesome.
That's awesome.
It's a great strategy.
That's great.
So that's like that edge.
That's good.
The middle one on evaluation, I think that, like, you know, this is also sort of a Peter culture thing, which is open debate. There are no sacred cows. Hierarchy doesn't exist. It's like, you know, whether it's me, Peter, Napoleon, which are like the GP, or the newest person into the fund, we want everyone to be fighting and advocating for what they believe we should be investing in. And because of that, you get this really vibrant culture of debate. You know, it's not like a single hegemonic figure coming in and, you know, beating down the junior people and telling them how to do things.
A friend of mine who used to work here was saying that, like, somebody asked him if like the fact that people like debate hard was like one of the tough things in partner meeting, and he's like, no, that was like amazing. Was like there was enough trust and respect between people to like fight it out for real.
Totally.
Which I mean, this doesn't exist at like a lot of places.
One of the most shocking things to me when I first joined, I had worked with Peter for a while when I was at Palantir. I was at Palantir for 6 years before I came here. But I kind of had this expectation that Peter would be this sort of immovable intellectual force. And actually, that's
you can convince him off stuff.
You can convince him off stuff all the time. You have to construct a good argument, and that's how you're going to gain respect with him, is by winning an argument. But I was shocked at how he would take a position. We would, you know, litigate the position. And if he felt like there was a better argument being made, he would say, yeah, I think I agree with XYZ person that made that argument instead. And so that is very core to who we are as a fund. And I think that's served us well.
And so that's unpicking.
That's unpicking the evaluation.
Is there anything else besides just like, you know, so like there's the debating, but then there's the contents of what's being debated. Like, are there any ways of thinking or mindsets that like that are in there? Because it's like you want, you know, good ideas are winning, obviously. So like, what's in that?
Yeah, I mean, there's a bunch of different ideological pieces to this. Many of them are described in Peter's book, 0 to 1. We really don't like consensus categories. Anywhere where you find a bunch of competition, we try to stay away from. I think chapter 6 of Peter's book is literally titled "Competition is for Losers." We don't love competitive market spaces.
Just to click on that, like if there's a space, let's say there's like a AI customer support. There's something where like, this is both good and competitive. Like, you're not going to not invest just because there's competition. So how, like, what would the conversation be like if you're looking at something in code or support or one of these places that are both competitive, but obviously valuable?
Yeah. I mean, we're huge investors in Cognition, for example. This was literally the tenor of the debate internally when we looked at writing that first check into Cognition. It's like, do we believe that the founder, that like atomic element of the company, is so good that we have to get over our philosophical, nearly dogmatic hesitance to go into these competitive consensus markets? And in that case, the answer was yes. But in many cases, the answer is no. Like, you have to have an absolute killer to feel really good about making that bet. But then it's really not a company bet. It's a founder bet. And so you're not betting in the category. You're investing in the person.
Having this debate a little bit with Peter the other day. I don't want to mischaracterize his position, but let me give you his framework and you tell me what you think. So a lot of people are investing in AI. They want to be in part of it. I have like, there's 6 levels. Level 0 is energy and all the energy infrastructure. Level 1 is chips, NVIDIA. Level 2 is data centers. Level 3 is like all the model companies, right? Which is the Meta and Google and X and Anthropic. Level 4, I'd say, is software infrastructure, which is like horizontal to deploy AI. And you could argue Palantir is kind of level 4. And level 5 for me is actually the applications and services, like directly doing the services in the economy. And so as a venture fund, most of what I'm doing is level 5 right now. And I think there's a little bit of level 4, but I'm worried level 3 is going to eat a lot of level 4. And that's the question. And I'm curious if that's similar to how you think about it.
Well, I do think, I think it's generally speaking, most of our business should be focused on kind of level 5 with elements of level 4 out of this framework. But it's also that contrarian but right. Like if you find an interesting chip company, you might go, oh, I'm actually going to do this one.
There could be something level 1 that's still worth doing.
So you can actually do level 1. Or, for example, it's, actually, everyone's really focused on this narrow set of techniques, mixture of experts with LLMs and, neural networks or diffusion models. And if you find something that's different
way to deploy it,
then you might go, okay, I'm gonna operate in different levels.
A level 4 or something to do infrastructure, spiel miss. Because I have done a few level 4 things. Like we were in Olama early on. I don't know what it's worth. It's amazing. Everyone's using it. So.
Yes, it's great.
You're building a lot, investing a lot here. Tell us about Manus AI, because that's an application layer company for this.
Well, sort of. It does have application, because the one thing about the framework is companies can actually have a combination of them. So like, no, Manus is not going to go try to build, a 700 billion or a trillion parameter model.
But it might build a model still for what it's doing for drug discovery.
Exactly. Right. So it's still going to do models, but it's going to be doing this kind of specific thing with specific data and using other models as a way of doing it. And that's part of the thing that is the reason why it's like, look, when the whole flood of everyone's moving this way, be very careful about moving where the whole flood's moving. Look at where the other interesting things are. And so it was like 3 or 4 years ago, I went to my partners, Greylock, and said there's going to be a ton of coding agents. There's going to be productivity software. There's going to be, a robotic process automation. There's going to be all this stuff. It's great. I'll help you. Want to invest in it. But I really want to look at is the areas that most people in Silicon Valley are not looking at. And I actually think drug discovery could be one of those areas. I talked to Siddhartha Mukherjee, and he said, okay, cancer is the totally right focus here. And by the way, because I'd known Sid as the Pulitzer Prize winning author of Emperor of All Maladies, as a celebrated international oncology researcher. It was news to me when we were at dinner at a sushi restaurant in New York, when he was like, I brought cancer drugs to market. I was like, no, I didn't know that. Oh, let's talk about how this could work. And that's how Manus came about.
Valley, we were definitely outsiders to the Valley. And so take that even further, like Stripe more recently, if you think about the evolution, obviously the quantums have gone up, but Stripe to me is kind of the evolution of this exact same confidence in making these big contrarian bets, where COVID happened, all these companies were high flying. Obviously then it all went down and numbers decelerated. Everyone thought, oh shit, is this over? And if you were really grounded in the numbers, you were scared, or it looked like an unobvious deal. But if you kind of take a step back and say, okay, well, Stripe, what is it levered to? It's levered to the growth of payments online and e-commerce. And I said, Jack, what do you think e-commerce penetration is going to be in 10 years from now?
A lot.
Like no one doubts that. Kareem has this line, it's a lot easier to predict the long term than it is the short term. But everyone in that moment, what are they trying to do? They're trying to predict what will Stripe be in 2 years from now. And so we went in, we spent all of our time with Patrick and John, we've known for a long time. We spent time with the product, all the things that you would think about, not just the numbers, and we decided to lean in. And then what was unique about that, and I think reinforcing to how we've evolved, is we put in almost $2 billion into the company, but they needed to raise 5 or 6. So we had to then go help them raise the money. So a bunch of us went out and pitched to other investors why we had so much confidence to put that much money into Stripe. And this is now in early 23. And so the market environment was not go-go, is coming off of this post-COVID hangover. And everyone to us was basically saying, it looks way less profitable than Idean. It's not as good of a business anymore. Patrick and John, they're great, but are they really kind of the founders for the next era of the business?
It's interesting because I think you get categorized for that investment as like consensus compounding investment type of mindset.
To us, it's so visceral how not consensus it seemed. It was a really good formative moment for us in what it feels like to continue to double down at scale with independent conviction.
You sort of described also like an investing mindset that I would traditionally ascribe to like early stage investing, but applied at like growth plus stage. Like you're talking about the founders, you're talking about the product, you're talking about like the long term and like not being too close to the numbers. Do you think that when you think about Thrive's great late stage investments, it was more of a growth mindset or an early stage mindset that led to those decisions?
I think the growth mindset, if you want to kind of call it that, which basically a shorthand way of saying it's very quantitative and numbers driven, is important. But our whole philosophy is we start with the qualitative, we develop a hypothesis, and then the hypothesis has to be confirmed by the quantitative. And it has to be in that order. Because if you start with the numbers and you get so excited about the numbers and then the numbers go down, you lose all your confidence. But if you start with the people and what they're doing and the customers and the product and you build confidence, and then they miss a quarter or they miss 2 quarters, you don't react of like, oh shit, my returns are now going away. You try to unpack why and what happened. Is our assumption on the product wrong? And that's what should change our confidence almost.
We don't play that. We don't play that. We don't play don't play around.